What's going on, everyone? I hope everyone had a fantastic weekend because things are about to get pretty exciting in the market this week. We have a lot of things on the schedule. We're coming off of a pretty exciting and we'll call slightly scary earnings reaction as we had Apple down 5% on Friday. We're set for a pretty exciting week. In today's video, we're going to go over some awesome setups for this week and tomorrow and some very important things you need to know. As some of you guys probably might have already noticed by now, Tom will not be with us for today's video. That's all right. He had to take care of some things, and he'll be back in action for tomorrow's video. But with that being said, let's jump right into today's episode and starting off with the earnings. While earnings isn't as exciting as it was last week, we still do have some pretty important reports coming out. First one's first is Palantir. On a Monday after close. This is like an AI stock that has been booming a lot lately over the past year, and earnings season so far has not been the best, and unless they have like amazing guidance or amazing numbers, this report, it can get nasty. Palantir is a stock that I love. I love this stock for the long term, and I'm just going to keep buying them for years and years and years, assuming the price doesn't get too crazy. But I love this company, but so far, earnings season has been mostly bearish, and it's not that the earnings were bad. It's just like a lot of the reactions just haven't been good enough, whether you're looking at Microsoft or Apple or like even like Tesla. Like these stocks didn't like crash, but it's like they're falling, and it's not like their reports were brutal. It's just they weren't good enough, so it's like, if Palantir just has okay earnings, bears have kind of been in control lately. But either way, I love the stock for the long term, and I'm excited to see how they did this quarter. For some other earnings for this week, we have Rivian after the bell on Tuesday, we have Disney after the bell on Wednesday, and we have Alibaba before open on Thursday. Out of them all, I will be watching Disney the closest. They are a company that has gotten no love in the market, not only this year, not only over the past 2 years, but this poor stock is basically at the same level it was in as it was in in 2014. It's crazy to even say that, and they're like basically at their COVID low right now. The only good thing with this stock is it literally does whatever it wants. Its correlation to the market is very minimal. So, it can just do whatever it wants, which is a good thing. But either way, earnings season so far has not been the best. So we'll see what happens, and it should be interesting. What's also worth noting is that, while earnings season isn't the most exciting, or while this earnings week isn't the most exciting, last week kind of stole the show. This week is going to be a big week for multiple reasons. We'll touch on them in a second, but keep in mind we are coming off of that credit downgrade from Fitch last week, which was definitely not good news. Is it the end of the world? No, but I promise you one thing: it is not good news. It's like, as a simple analogy, let's say you have your credit score drop, you're going to have to pay higher interest rates, right? Among other things. But think about that to the tune of trillions of dollars and the United States government, right? So what we're seeing right now is the market pulling back a little bit. We're seeing some lower highs being made on SPY, which is, not necessarily a good thing. And what's also worth noting is that we're coming off of some of the most powerful stocks in the market, like Apple, falling with some steam after their earnings report. So it's definitely pretty interesting in that side of things. But out of everything, I'm talking the credit downgrade, I'm talking earnings, I'm talking setups, I'm talking everything. The most important thing by far to watch, not only for this week, but for the coming weeks, is the inflation data that is set to release on Thursday before market open. This data will be crucial. This data literally has the power to make the market just pull the rug on the market and see some very intense selling pressure coming in. Or if the data is good, it has potential to act as like a backdrop and then, a stabilizing force, if that makes sense. But the reason this report will be so important is because, one, we're coming into the market that's getting more and more weak, you can say, but also, at its peak, inflation was around 9.1%. Wink, wink. That's what was reported, right? We all know it was a lot more than that, but hey, they say 9.1%, right? So let's say it was 9.1%. The most recent report came in at 3%, right? So that's good. The only problem is that this report, the inflation data is set to come in at 3.3 or 3.3 to 3.1%, which is higher than the last report. So that shows inflation's like, it's not really just going away, it's just like it's actually rising a little bit on a year-over-year basis, which is not a good thing. Now, what's worth noting is that if inflation comes in at, like, let's say 3.4% or 3.5, or I hope not higher than that, but if it does come in higher than that, that can be brutal for the market. But if it comes in lower, let's say it comes in at 3%, maybe 2.9, maybe 2.8, maybe I'm being a little bit too optimistic, but maybe 2.5, then that can be awesome for the market, right? But it all depends on this inflation data. We've seen inflation data rock the markets in the past, and we've also seen it help it quite a bit. This data is so important. Thursday before market open, in my opinion, it will control whether we see a decent drop in the market going forward, or if it just holds up and ends up muscling out this bearishness in the short term. But so important right there. What's also worth noting is that while we have the credit downgrade, while we have big tech selling off from earnings, while we have some bearish technical factors, we're also coming into a seasonally weak period for the markets. Basically, what we can see on the chart right now is the red line, which shows the market right now, and the blue line, which basically shows, what the market normally does given the presidential election cycle. What we can see right now, indicated by this red box, is that we're coming into a relatively weak period for the market. It doesn't mean the market has to crash. It's just like, historically speaking, around this time, it's been pretty weak, right? And this is not the first chart showing this. Over the past couple of videos, Tom and I have been showing chart after chart after chart that August tends to be a pretty weak month. Whether you're looking at it in like the presidential election cycle view like we are here, or even if you're looking at it just from like a stats-based perspective right here. So like we can see we have three lines in the chart. The green line obviously is up a good amount, and that shows you how August normally is if the market is down year to date, right? But that's not us, so we got to ignore that. Then we have the dark blue line, which shows August is normally up a little bit if the market is up less than 10% year to date. But hint, hint, it's up a lot more than 10%, so that's also not us. So if we go to the last line, all the way at the bottom, that shows August is normally a weak month, and that happens when the market's up 10% or more year to date. And that's the camp we're in right now. So it's just another data point that's just like in the bears' favor. So there's a lot going on right now, and I'll say this. The market we're in right now is not the market that we were in 2 weeks ago, or a month ago, or 2 months ago, or even the beginning of this year. It's changing, right? And that's just how it is. And it's like you have to be able to adapt with those changes if you want to survive. That's how trading is. And in a lot of instances, that's how life is too, right? But the market we're in is changing, and it will be crucial, especially this week coming off major earnings and going into major inflation data, is be willing to adapt. Looking at the market intraday on Friday. This type of price action is not something that the market has seen too much of this year, if I'm being honest. Like we saw an attempted bounce right at open, hard rejection, right? And then support held. And then it came all the way back up and literally made a new high of day. And then the next thing you know, the market came cratering down, right? What I'm especially, I don't want to say warning of, but I'm saying to look out for more of like this type of price action. Like when you see the market start to sell off, at least over the past couple of days, it has gotten pretty violent. Whether you look at it intraday on Friday or whether you go back like in, on Wednesday, it was pretty nasty, and like sell-offs, it's almost like rolling like a giant snowball down a hill, right? Like it gets like more and more and more volatile and crazy as it goes on. So keep that in mind, but I'm pretty excited overall. So With that being said, let's jump right into some setups for tomorrow. And one stock I'm watching very closely is SQQQ. This one normally gives me a tongue twister, but I got it this time. So SQQQ, basically, this goes up when tech stocks go down. Right now, we're seeing tech stocks relatively weak. And a lot of different, I guess you could say, data points, whether it be technical or just statistical or whatever you want to say, or whatever you really want to look at, because they're all mostly bearish right now, are pointing towards at least a little bit of a pullback. So looking at SQQQ, if we do see this pullback continue, this thing can pop up pretty nicely. It's a stock that I'll be watching very closely over the coming weeks, and I think the risk-to-reward ratio right now on it is pretty favorable. Another stock I'm watching very closely is the powerhouse Apple. And Apple is down 5%. It was down 5% on Friday. This is not something you see very often. And honestly, it's looking kind of like an earnings continuation setup. So like if we go to Netflix, what we can see, I love to use them as an example because they're like a perfect example. When they fell on their earnings report in April of 2022, they didn't just fall for that one day. They fell for weeks after the fact, right? And like even the same thing with Upside. When they popped up, they ran for weeks after the fact. Apple, unfortunately, is showing some warning signs like that, you know? Their revenue is literally down year over year. That's not something you want to see, especially out of the most heavily weighted stock in the entire market. Because if Apple or Microsoft or stocks like that move one way, it is literally and directly very hard for the market not to move that same way. So if Apple and Microsoft are tanking down, it basically means, SPY, you're coming with us, whether you like it or not, right? So that's just something to keep in mind. Like, if Apple's down, it has an impact on the entire market. So I'm watching this one pretty closely to the downside. Yeah, I am. I mean, the momentum's pretty good. Big volumes coming in too, and they're coming off of earnings. So it's a stock I'm watching very closely, not only for tomorrow, but honestly for the next coming weeks. But with that being said, let's jump right into some momentum plays for tomorrow. With the first one, we have WBD, and this one is to the upside. For those of you who don't know, this is the company behind the Barbenheimer movies, and a lot of us know that has been pretty successful so far. So looking at WBD, if they break above the $14.15 level, we'll be watching them for calls. With the next one, we have good old Tesla or Tessie. If they break below 252, we're watching them for puts. And then last but not least, we have Meta, and this one's also to the downside. If it breaks below 308.50, we are also watching this one for puts. So those are the momentum plays for tomorrow. But it is now time for the big money $700,000 trade of the day, and we are looking at none other than Unity. Long story short, someone dumped 700 grand into these Unity 38 strike puts that expire on June 21st of 2024. For those of you who don't know, this is a trade betting that the stock will go down. The lower it goes, the more millions they'll make. Unity is a stock that is especially volatile. This thing, just over the course of a couple months, swings from 25 all the way up to 50, right? It's a volatile, quick-moving stock. So, you know, a lot of stocks are getting weak in the market right now. I think the play is decent. It's not my favorite play ever, but if you did want to play it, just be prepared to give it some time. This option expires in June of 2024. So give it some time, but not a bad setup. Overall, though, I'm super excited for the market this week. It's something that we haven't seen, right? We have a lot of the major earnings out of the way. We have some absolutely insanely important inflation data releasing before the market opens on Thursday. And I think we got everything we wanted out of earnings season. Was it an explosive green earnings season? No, but like honestly, I don't even think that would have been that great because so many of these stocks are very overvalued anyways, you know? So I think what we're seeing right now is perfect. I think there's a lot of money to be made in this market, assuming you're willing to adapt, you know? This market will not be the same market as it was so far this year. Those who can adapt will do very well, but those who can't, it'll be tough. The market's changing, and I'm just very excited. This type of price action is very exciting, especially for short-term options traders. So I'm pumped up. I bet you guys can tell from my voice, so I'm very excited. Thank you guys so much for watching today's video. If you are, for some reason, not subscribed to the channel, destroy that subscribe button. When you do, you'll see our videos recommended to you more often. And last but not least, I want to give a huge shout out to today's member of the day, Omar G on YouTube. You're still relatively new to the channel, but thank you so much for all the kind words and support. Besides that, guys, thank you so much for watching, and let's have an amazing week in the market.